Hey, what's up, everybody? My name is Ruben Rodriguez from Tenacious Tribe, and here I am once again for our series of analyzing trading assets. First and foremost, of course, I never forget this part. I just hope you guys have had a very nice, very profitable and pleasant, or not, but profitable trading day. No clue still how the stock, the S&P 500 performed today. I'm not gonna look into it today. Today I'm gonna cut it straight to the point, and I'm gonna furnish you guys with what's advertised in the title of this video, which is pretty simple and in line with what we've been doing here with our endeavor. What we're gonna be doing here today is purely analyzing the BBBY or Bed Bath and Beyond Inc. From a price action technical analysis perspective only. Um, and off I go. Already my favorite time frame is the monthly time frame. That's the time frame I'm going to be using to analyze this stock, this equity. And what else do you need to know about me? I'm more a momentum trader, momentum long term position, momentum trend forward trader. I have my own strategy that it took me 3 years to develop it and prune it and master it, and then now it's pretty much, aside from DCA, which I still do, which I still do trade, and another ETF bottom fishing strategy. This momentum trading is the only one I've been using it. I feel very comfortable with the divergent trading also. But I mean, the simple reason why I've not delved into it is because I already have a very profitable strategy which I master and command. I've run and back tested a strategy with over 4,000 stocks. I have roughly 10,000 trading records of this strategy. I know its ins and outs, and I know how to play with it. I have no reason to trade other thing, although I'm comfortable analyzing any sort of stock, any sort of financial asset from a price action and technical analysis perspective, and also to sort of try to understand or try to look for um, rational or attractive risk to reward setup scenarios, and that's what I'm going to try to do in BBY here. And follow me step by step. Maybe my perspective can offer you something new, can complement yours, or can give you ideas that are, or visions that have not been especially looking for, or especially concerned about encountering. And perhaps I could add some information to your analysis that you're not expecting to find. It might turn out to be useful to you, to help you to make a more seasoned decision on whether to buy or sell this stock, or which has been very popular over the past days, have you guys been seeing. Let's get to the chase and off we go. First thing I do here, is I try to establish the trend. Why? For individual investors, yet again, unless you have like an extremely well back-tested trading strategy, the best thing you should be doing is to trade with the trend. Reason being is equities, stocks, even currencies, the majority of assets, if not all of them. I still don't know an exception to this rule. Is they trade in trends or in ranges, and they transition from trends to ranges and ranges to trends. And trends take a lot of money, power, effort, contrarian effort to reverse. For this reason, for a retail trader and individual investor, perhaps the best way to stack the odds on his favor, in order to obtain a profitable result, is to trade with the trend. That's why we're trying to identify here the trend. What we got, you got many ways to identify a trend. This one is pretty much ostensible. You see all these touching points, allowing us to draw this downward sloping trend line. What else can you do? From a price action perspective, you also got this. Got a lower high, lower low, lower high, lower low, lower high, What I mean by lower high is this point here, this swing high is lower than this swing high, this swing high is lower than this swing high, this swing high is lower than this swing high. Same follows for these lower lows. This swing low is lower than this swing low is lower than this one. This swing low is lower than this one. This is how you describe pretty much a downtrend, long-term downtrend. What else can I add here? Okay, after we've establishing the stage of the market that we're into, which is downtrend. Now we're gonna try to ascertain whether it makes sense for us to trade this trend, trade again with this trend. Maybe it's overextended and it doesn't make sense, or it's risky for us to step in a late stage of this trend. Or not. In which case, we might be looking for. Next thing we're going to do is look for value zones from where to trade, and I'm going to explain you why we're going to look for value zones. As to value zone, let's start with supply areas. Let's see which point says that price touched recently and respected. This was one of them. We got one touch, two touches, three touches. Another one touch, two touches, three touches. This whole area. This was another touch. I'm gonna explain you afterwards what this is. This is another area. You got these touches here, this touch here. These also using it as support. This touch. And above price, that's what we got here. These will be the overhead supply areas of this price. What do I mean by overhead supplies? Price is memory. Whenever price was at this stage, there were bears selling this price. Retouched this price, the bears sold it. Price was here, was sold by the bears. Price came back here, was sold by the bears, and then it rallied down. Price was here, sold, 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 and sold. These are areas where the bears typically step in, and the trend is you should expect the bears to step in once the price gets back to these areas. Reason being, price has got memory once again. Let's say. So this was what, range 47 to 52. Someone who sold here, an investor who sold here, whenever he sees the price getting back to this area, will feel tempted to sell again, unless the fundamental reasons why he sold are not applicable anymore. If he found it attractive to sell here, he's gonna find it attractive to sell here. Same follows for these traders here. So perhaps these traders were the same ones as the traders who were here. They thought it was attractive to sell here, and once the price is retraced back to these levels, they thought it was attractive for them to sell once again. So let's sell. This is resistance then. What else? What else could explain this resistance area? Let's say I was a buyer here, for instance. You see this tip here? There was a breakout here. Let's say. So I bought the stock. I bought BBBY at this price level. Then I saw the price trading against me a lot. And what was I seeing in the PN? I've experienced this thing with the GME, by the way. Maybe you did already as well. Then they saw the price pretty much trading against them. They saw their PNL in plain red, and they were like panicking. They were like suffering. The pain was excruciating, and at that moment, all they wanted to see in the chart was for the price to get back to their break-even levels and sell once again. That's all they were praying to the gods. Please get me back my money. I don't want to see this red anymore. Please give me one more shot. And so once the price got back to 50, to this range, to the range where they bought, they were very happy to exit this market at a break-even, for instance, and they sell. That's going to create overhead supply. That's going to create a resistance area. And that's going to be another reason why in these areas, like same applies for traders who bought here, for instance. What do you think is going to happen to the traders when they see the price getting back to these levels? They're going to sell, of course. They're going to be craving. They're going to be praying to all gods to leave this market at a break even. So they'll be selling here. So yet again, resistance. Of course, same trail of thought follows for these two purple areas here. Overhead supply, overhead supply, overhead supply. Whenever price gets back to these levels, the odds are. I'm not saying it's gonna get back to where it was. I'm saying it's gonna face some obstacles. Maybe congesting a little bit. Maybe uh, ranging a little bit in the lower time frames and then breaking out once again. But I wouldn't say it's gonna pierce easily. Yeah, look here for instance, it got back to this level, touched, got rejected, went upwards, got rejected. If you see this in lower time frame, it's going to be a ranging market. Here, same was touching this level again, rejected, and then yeah, once the supply and demand once the congestion was sort of squeezed and there was no longer so much support in this market. Then the price was able to pierce through this level, not like exactly after this first touch, for instance. Having this said, next step, let's go to the demand area. What do I see here? I see here something interesting on the RSI level. Look at this. This is an uptrending RSI, a downtrending price. This is a classical RSI bullish diversion. What happened afterwards? So downtrend. What happened afterwards? The RSI divergence. Boom, uptrend or end of the downtrend. But we're here to find our demand area. I see that with this candle, there was a momentum shift. Momentum started going bullish. Look. And okay, then this was COVID 2020, sort of like an anomaly, but the price was yet again bullish when it touched it. When it touched this range, you look at the uptrend after the price touched this range. It went straight up on a very strong rally. Same happened. Same happened more contemporaneously, where we saw the price hitting the same levels and respecting this demand area, and we saw price bomb rallying 94% as it is month to date. This means that there's a lot of bullish presence around this level, this level. So this demand area, this is confirmed as a demand area, place for the bull step in. What else afterwards? Okay, so we got supply, we got demand. Let's try to cross section them and try to ascertain where our value areas are for our trading ideas. I would say value area one would be this one for a bullish trade, and value area for a bearish trade would be something like this one. Oh, sorry, wrong arrow. This one. Why am I saying these are the value areas? I'm saying that if you're bullish on this market, we have already established that demand is here, that the bulls are supporting the market here. What does it tell you if the price pierces below this price level and closes? I mean, it could be a fake breakout, of course, but I mean, provided it's not a fake breakout, it tells you that the guys who are buying here, no longer are buying and are supporting this market. If these guys are no longer supporting this market, these guys with big money to support it, though it's because yeah, they're proving here they got big money to support it. They bought, the market went up. They bought, and this month like 90%, 94% up. So these guys got money to sustain this market. If the price pierces below this level, what is this telling me? These guys are not in the market anymore, or if they're in the market, they're seeing a very ugly red number in their P&L, and they're very motivated to sell. And not supporting and keen on selling means bulls are wrong. If you're in a bullish trade, you're wrong. And it means it's very cheap for you to ascertain if you're wrong. So pretty much if you put a stop loss somewhere around here, you know you're wrong. And yeah, you get a very cheap way to receive feedback from the market. So our feedback loop is very cheap. That's part of the reasons why I call it a value zone. Same follows for in comparison, of course, and related to, let's say for instance that you're entering the market here, and you have to set your stop loss here, for instance. Look at the difference between stepping here, for instance, minus 95. Okay, that's not beautiful at all. Or stepping here, humongous difference. 95 really. Well, not much because it's market. Though this would mean this would be a gigantic loss in any case. In any case, it's different for me to step in from here in a bullish trend in here, and knowing that your stop loss would have to be here because of course you'd have to apply very sound risk management principles. Um, Same follows for the bears. For the bears, I mean, for a bear trade, the bear trade have to go along with the market, along with the market trend, of course. Value area will be somewhere close to this price range, for instance, or even a breakout from the supply area. Because if this trend line was breached, if this trend line was pierced up, then you know the bears were wrong, and this is a very cheap feedback loop you got. So let's say there was like next candle was a bull candle piercing through this downward sloping trend line. You know that the bulls are in control now. You know that the reasons why you set up this downward sloping trend line exhibiting or displaying or telling us that the market is in a downtrend are no longer sustainable because there's a bullish candle piercing through this trend line. So we know that the bears are probably wrong and this market is entering a different stage, namely, for instance, a sideways market, a ranging market, or preparing to accumulate positions for an uptrend. This is reason one why this is a value zone. This provides you a very cheap feedback loop. Reason two is because it provides you with a more meaty trade. For a bearish scenario, I would wait for a breakout from this, from a breakdown and below from this demand area for the reasons already explained. A breakout and hold above this demand area would mean that there's no longer support for this market, and whoever is holding this stock is very keen on selling. As a stop loss, I'll put price right above this trend line because if the price breaks and close above this trend line, this would mean that the bulls are actually in control once again. Therefore, the reasons for it to be a bear no longer stand. And I'll probably trail this one, the 10 EMA. And on the bullish side, what I'll be doing here is I would enter if there was a bullish candle piercing through this downward sloping trend line. A bullish candle, yeah, once again, in line with our analysis, a bullish candle piercing above this downward sloping trend line and closing would mean that this trend had just come to an end. This would be bullish. It would not mean per se that we're now in uptrend. Perhaps the market would be trading sideways, but it would mean that in principle this demand area would sustain and that the upcoming market stage would be an uptrend. Something I could do, for instance, here was to enter here and in view of the three main overhead supply areas we have here, I would have perhaps take profit target year one, take profit target year two, and take profit target year three. So I'd sell one third of my position once the price hits this level, one third a year, and one third year. For instance, just tips, I guess. If you think they're useful, just feel free to use it, of course. No financial advice, of course. I'm not a CFA holder. I do study this topic a lot. I do exercise it a lot. I do back test it and feature test it a lot. The biggest piece of advice I can give you is for you to be very extremely diligent with your risk management. That's the most important thing. For me, I never risk more than 2% of my total capital in any single trade. That's an absolutely non-violatable rule. It's vital for me. Besides from it, if you don't know what you're doing, just don't trade the dollar cost averaging and just try a robot first and try a demo account first. And that's it, guys. 10 seconds until my analysis goes out. Hope you guys enjoyed it. Comment, like it, interact with me. I'll be very keen. Cheers, guys. Hope you guys enjoyed it.